This is John Graves, author of The 7% Solution. You can afford a comfortable retirement, and editor of theretirementjournal.com. This afternoon we're speaking about life insurance, and now we're talking of beneficiaries. A life insurance contract is an agreement between an insurance carrier and the insured. In acceptance of premiums by the carrier, they guarantee to pay a lump sum of money in the event of the insured passing away. They will pay that money to a named beneficiary. In your situation, if you apply for a life insurance contract, it's very important to name a beneficiary. You don't want to say, my spouse. You want to say, Sharon Ann Graves. You don't want to say Aunt Sally. You want to say Sally Ann Higgins. You don't want to name a minor as a beneficiary of a life insurance contract. It's much better, always more appropriate, to name the person who is responsible for that minor, the minor's custodian. In addition, on that insurance application, you'll find a line that says contingent or secondary beneficiary. It's always wise to put someone in there. In the event of the primary beneficiary passing away, not being here any longer, that contingent beneficiary will step in their place and will be able to receive the death benefit proceeds immediately. It's important to review beneficiaries that you have on older insurance contracts, or in fact on IRAs, 401ks, 403bs, any retirement plans you have at work, because those also have named beneficiaries. If, for example, when you were 28 and Mary Sue was your girlfriend and you named her as beneficiary on your 401k when you worked at XYZ company, 15 years later you're married with 2 kids and Mary Sue's not your spouse. You've left the money at the 401k at that old firm and moved on. Nevertheless, you still own those dollars, that investment. It's important to change that beneficiary to your current spouse. You don't want to have a graveside argument between the two of them as to who gets what proceeds. Many of us draft a family trust, a living trust, an AB trust, a family shelter credit trust, as we mature. If you do so, you typically want to change the name of the beneficiary on insurance contracts, or at least review those beneficiary names. You may wish to have the living trust as beneficiary. You may wish to not have the living trust as beneficiary. It's important to review that information. As beneficiary, if you happen to be one, it's important to give the insurance carrier a certified copy of the death certificate and fill out the claims application form, very simple, and do so in a timely and efficient manner so that you receive the claim efficiently. Usually within a few days or a few weeks, you'll receive either a check or more often a checkbook against a money market account that they hold the proceeds in for you. If you are a beneficiary of your spouse's passing, you don't want to have to spend that money right away. The last thing you want to think about is making significant financial decisions. So, as a bereaved beneficiary, it's wise to simply let the money sit, either with them in their checking account or in your bank account, and defer any significant financial decisions for several months. Simply use the money to pay your current bills. Make no financial decisions until the grieving period is passed. If you happen to be the beneficiary along with another individual, co-beneficiaries, you want to know who that beneficiary is, and you both are going to need to sign that application for the proceeds and accept those monies as co-beneficiaries. In the unlikely or unfortunate event that you may have debts owed and you receive beneficial proceeds, those proceeds may be attached by your creditor. So be aware. This has been John Graves. Thank you.